Hello everyone, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this webinar on this rather historic day, because it's the day after the federal government passed their third major package relative to COVID-19 survival plans. Today we're going to talk about how COVID-19 survival plans will assist your client to survive. I'd like to welcome the people who are watching us live from Facebook. Today, I hope you enjoy this presentation. If you have any questions, can you please send me an email, peter@essbiztools.com.au. For those of you who are participating in the webinar, if you have questions or comments you'd like to make, can you enter them into the chat, please? And I'll review them from time to time, and we'll have a discussion at the end. We will be sending you a link to this recording, probably on Tuesday now, but you will get it, and hopefully that will help you and your colleagues in your firms to be able to get a clearer understanding of this process of developing a COVID-19 survival plan for your clients. Well, last night, the Parliament passed the JobKeeper payment, a commitment of $130 billion. That's a big amount of money, isn't it? Primarily relating to payments that are going to be made to eligible employers so that they can make payments of $1,500 per fortnight to the employees that they had at the 1st of March that they are retaining within their businesses. We're going to talk more about that shortly. The other big development this week, following on from a National Cabinet meeting last week, is the National Cabinet has approved the mandatory code of conduct for SME commercial leasing. Now, this is for businesses with turnovers under $50 million annually, so it's the same as the JobKeeper payment. And in fact, it's one of the key requirements to be able to utilize the mandatory code of conduct relative to negotiations between a tenant and a landlord, is that the tenant must have qualified to be eligible for the JobKeeper payment. In other words, annual turnover under $50 million, and the business must have suffered a 30% reduction in turnover because of the COVID-19 coronavirus. And more about that later. But this is a very interesting development that hasn't had that much publicity, that the government has come to the assistance of people renting premises for business purposes. Whatever you thought 2020 was going to be about, think again. Scott Morrison made that comment about 3.5 weeks ago. I don't know whether he then envisaged what has happened in that intervening 3.5 weeks, because we've had 3 stimulus packages now on COVID-19 coronavirus. And prior to that, and I think at times we tend to forget, but a lot of Australian small businesses, farmers, primary producers, and large businesses, of course, suffered immense problems from droughts, and some of the droughts had been going on for years, bushfires, floods, and cyclones in northwest Western Australia. And then along come the coronavirus. So we've really had a lot of this problem areas in the last 6 to 8 months, or full 12 months if you're including droughts, which obviously we've got to. So this is a defining moment. This is undoubtedly the biggest combined challenge that we've had for a long time. And some people are saying 100 years, going back to the events in 1919 from Spanish flu, which killed 50 million people, apparently 15,000 in Australia, when our population was only 5 million. So I think that explains some of the real concern that the federal government and the health officials have when it comes to COVID-19. So it's a huge challenge. It's a health challenge as well as an economic challenge. There's been 3 stimulus packages now introduced. When we saw the $17.5 billion in stimulus package number 1, I think a lot of us thought that might be it. But then we've had 2 others that now aggregate around $300 billion. And a lot of that money is targeted at businesses with under $50 million in annual turnover, small and medium-sized enterprises. So this is a defining moment, isn't it? It's been a defining moment for the Prime Minister, but it's also been a defining moment for a lot of our clients and a lot of you accountants who might now be working from home, or if you're not, some of your team might be, and undoubtedly some of your clients are. Some of them had forced lockdowns that the government's imposed on them to try to bring this virus under control. But what are the challenges that working from home brings? There's also been a number of government assistance packages. In fact, it's getting a bit difficult to keep up with them all. We produce these packages into papers, which our subscribers can access. And the lady that writes these has been flat out keeping them up to date and then getting them onto our website so that our subscribers can access them. And it's not only the federal government that's been producing packages to assist businesses, it's also been the state and territory governments who've also produced a range of support for businesses operating within their state or territories. SMEs need commercial advice. That is the key message that I want to convey to you today. Many of you concentrate on taxation work, but with the greatest respect, this is not an era for talking to your clients about tax. That can come in 4 or 5 weeks' time. At this stage, it's got to be commercial advice to get them motivated to look at the challenges in front of them and to be saying to them, you're with them, you can help them, and that this problem will not last forever. There is some light at the end of the tunnel, and I think that light is going to get brighter week by week from now on. But we're going to be under these conditions for months to come yet, because the government and the medical people really want to eradicate this virus, not have it flaring up again. Your clients are looking to you to be a leader. Obviously, they've got a CEO or an owner or a managing director or a manager, but they need their accountant to be performing a chief financial officer role, broader than for a lot of you, your traditional role of being a taxation advisor to your clients. And hopefully this discussion today will assist you to get your team on that journey. So let's look first of all at the packages that the federal government has introduced. And all I'm going to talk today about is the federal government. We have written articles and papers on the stimulus packages being offered by the state and territory governments. But when you're broadcasting to accountants all over Australia, we're concentrating on the federal government programs because they apply to everyone. So we want to look at what's there for small and medium enterprises, businesses with turnovers under $50 million. Boosting cash flow for employers is the first program, and it was introduced in stimulus package number 1, a long time ago now. It's a tax-free boost of up to $100,000 to help pay wages. You don't have to apply for this. It's a benefit that businesses are going to receive based on the information you submit on your business activity statement as at the 31st of March, whether it's from the month of March or the 3 months of January, February, March. You have to lodge that by 28 April. And at that stage, the taxation office will be scrutinising your business activity statement and will be applying a credit equal to 100% of the pay-as-you-go tax that has been deducted during that 1 month or 3 months. And that is the amount of the credit up to a maximum of $50,000 that is going to be available, obviously within your accountancy firm or to your clients. When the business activity statement is lodged at the end of June, and it has to be lodged by, for the period ending 30th of June, it has to be lodged by the 28th of July, the taxation office will be applying a credit equal to 50% of the payment that was made in April. So if you were able to secure a credit of $50,000, which was the maximum in April, you will then receive a further credit of $25,000, or your client will, in July, and they also receive a further $25,000 credit in October. So it's based on 100% of the PAY tax deducted from the employee's payroll in that period. That's for the 3 months, how I was really explaining that. If you have clients who are lodging on a monthly basis, their business activity statements, you multiply the amount of tax deducted in March by 300. Tax-free payment if a business pays wages with no tax deductions. The government's also looked at this and decided that these businesses, which may not have been deducting any tax, will receive a total of $20,000 this year. $10,000 will be payable based on the March lodgement, to be lodged in April, and 50% of that, $5,000, will be applied in July, and $5,000 will be applied in October. Sole traders and self-employed persons are able to qualify for eligibility for the coronavirus supplement, which is a payment of $550 per fortnight. So you need to bear that in mind when you're talking to any sole traders or self-employed persons that you have, that they can access that benefit. And the recipients of the coronavirus supplement, which now includes sole traders and self-employed persons, are eligible to access superannuation. And the amount of superannuation that they can access is up to $10,000 in the period prior to 30 June 2020, and up to $10,000 in the 3-month period 1 July to 30 September 2020. And they have to apply for that via MyGov. Businesses with less than 20 full-time employees who are employing apprentices or trainees will be able to access the apprenticeship trainee subsidy, which is 50% of the wages paid to the apprentice or trainee, up to a maximum of $21,000, and it's based on the period 1st of January to 30th of September 2020. So it's 50% of the wage with a maximum payment in each of those 3 quarters of $7,000, making $21,000 in total. Your client has to apply for that registration process, and they can apply now. Let's look at businesses with turnovers under 500 million. So most of what we're talking about today is turnovers up to $50 million, but the government has introduced a instant asset write-off, which applies to businesses with turnovers under 500 million. Excuse my wording error there. It's WRITE, obviously, it's a write-off, and it's turnover up to $500 million that applies for. They'll get the write-off for expenditure up to $150,000. And if they've got the cash flow resources, of course, they can spend up to $150,000 as many times as they like. They'll be able to write off that acquisition. Those acquisitions have to be finalised by the 30th of June 2020, and the rules are the same as what they have been previously. The asset must be installed, ready for use by the 30th of June 2020. Businesses can also claim accelerated depreciation deductions at 50%, and that's available through to 30th of June 2021. And now we turn to the JobKeeper payment, which was approved last night by the Senate in Canberra. The government will pay $1,500 per fortnight for each employee who is engaged by a business at the 1st of March 2020. And the categories of employees are fairly broad: full-time, part-time, and casuals, as long as those casuals have been employed on a regular basis by the particular business in the 12-month period prior to 1 March 2020. Now, the JobKeeper payment period has already started. It started on 30th of March, so that system is underway. The eligibility, though, and I've been a little bit critical of some of the media commentary about this particular package. There hasn't been much said about the eligibility, whereas the eligibility is very important. Publishing articles which say that, in effect, 6 million people are going to receive this benefit might not be correct, because each of those businesses has to satisfy the tax office that the turnover of that business has been reduced by 30% when compared to a comparative period in 2019. Now, the comparative periods are the month of March if you are lodging the business activity statement on a monthly basis, or your client is, or the 3-month period, January, February, March, if you are lodging on a quarterly basis. There has to be a 30% reduction. The Department of Finance has issued some guidance, and I'll just read this to you. They issued a fact sheet a few days ago relative to this eligibility question. Where a business was not in operation a year earlier, and this will be a case for some businesses, or where the turnover a year earlier was not representative of the usual or average turnover because of some event. It may have been floods, and there were floods in that period in North Queensland, in Townsville and surrounding areas, and there was massive flooding in the northwest of Queensland, and over 1 million head of livestock drowned. That obviously affected turnover of businesses operating in those areas. So when something like this has happened, the tax commissioner has got a discretion to consider additional information that the business can provide to establish that they have been adversely affected by the impacts of the coronavirus. The tax commissioner will also have discretion to set out alternative tests that would establish eligibility in specific circumstances. I imagine most of your clients, if they wish to go down that path to prove a 30% eligibility drop in turnover, will need your assistance in preparing the forms and a document to be submitted to the tax office. There was a further comment in this fact sheet. There will be some tolerance where employers in good faith estimate a greater than 30% fall in turnover, but actually experience a slightly smaller fall. I don't know what the tax office are going to define as slightly smaller fall, but we will all find out undoubtedly. So that's the eligibility, and that's probably a key exercise that needs to be calculated now for your clients. So the JobKeeper payment, I've told you how it's going to be based on the business activity statements. You can apply for the commissioner to exercise his discretionary powers. Businesses have to register with the Australian Taxation Office for the JobKeeper payment. The payment's going to be at least a month in arrears, and it is based on employees as at the 1st of March 2020. The first payment that the tax office is going to make is in the first week of May 2020. This means that your clients have got to finance the payment because the tax office is only going to pay for employees who have been paid during the month of April. And the tax office can monitor this from the business activity statements. They're obviously not going to do that before they make the first payment, unless there's more forms that have been designed at present that no one's seen yet. But they will be checking it at some stage and could be issuing demands if people have been claiming the $1,500 per fortnight for people who they haven't been paying, and there'll probably be penalties in that case. So that's the JobKeeper payment. There's some other material, of course, that goes on and on for pages. We've produced summaries of the full system that relates to the JobKeeper payment within our material that's available to our subscribers, and we're going to talk about that a little bit later on. But hopefully that alerts you to what you need to be talking to your clients about. Now, the other interesting development that's occurred that really there wasn't that much comment on, I saw a fair number of articles relative to private leasing of premises, houses, flats, etc., apartments. But the National Cabinet has determined a policy on SME commercial leasing principles, and they have approved a mandatory code of conduct for commercial leases this week at their meeting on Tuesday. And they're calling it the SME commercial leasing principles during COVID-19. So what we're about to talk about is only going to apply for COVID-19 period. At this stage, the new code of conduct only applies to the end of September. If the virus continues, I've got no doubt that that date's going to be extended. The purpose of the code is to impose a set of good faith leasing principles for application to commercial tenancies. And the code mentions retail, office, and industrial. So it's basically all types of tenancy arrangements that a commercial business gets involved with. And it's between the owners and operators, other landlords and tenants. So it's the people involved in this equation. Now, the key item that comes up very early in this is that for a business to be eligible to participate in any negotiations to pay lower rent, using the government's mandate, they have to be eligible for the JobKeeper payment. So we've just spoken about the JobKeeper payment. They've got to have been able to show a 30% reduction in turnover or have satisfied the tax office on some other methodology of proving that their turnover has dropped. This means that the code only applies to businesses with turnover of less than $50 million per annum, because that's what you need for the JobKeeper. It's made some businesses a little bit unhappy. And I don't think landlords are very happy with a lot of this in any case, but that's up to the government to sort out. And the 50 million turnover threshold will be applied in respect of franchises at the franchisee level, according to the notes that the federal government's released. Incidentally, all of this is going to be controlled through state and territory legislation. The Commonwealth don't control any of this. It's all state and territory legislation. But in the National Cabinet meeting, the premiers and chief ministers have agreed to implement these rules, this code of conduct, in the near future, probably next week. So let's look at the principles that guide the mandatory code of conduct. Where it can, rent should continue to be paid. That's the opening comment. And where there is a financial distress as a result of COVID-19, and what they're referring to as financial stress is in effect a 30% drop in turnover for businesses with turnover under $1 million, or 50% drop if your turnover is over $1 million. And incidentally, the turnover drop for a charity, as long as it's listed on the National Register of Charities and Not-for-Profits, is 15% for the JobKeeper payment. So the Code of Conduct's looking for tenants and landlords to negotiate a mutually agreed outcome. This is not going to be black and white. This is how much you've got to reduce. The governments have agreed to a code to try to encourage and not have to come in with a big stick. But the way I read the code is if an agreement cannot be reached, both parties will have to go to mediation, and that will be the final decision. There will be a proportionality to rent reductions based on the decline in turnover to ensure that the burden is shared between landlords and tenants. If there's been a drop in turnover of 40%, I believe that what that's saying is that 20% will be borne by the landlord by agreeing to have a lease waiver for the tenant. Now, there's a few things in the code that most of them seem to affect the landlord. Prohibition on termination of leases for non-payment of rent. This is for the period through to September. Freeze on rent increases except where they're part of the lease agreement and are based on a turnover figure that's been agreed to. Prohibition on penalties for tenants who stop trading or reduce opening hours, and that's obviously happening all around Australia. And in some of the big shopping centres, tenants have declined to open because there's not enough people, potential customers going to those shopping centres because of the social activity rules. There's a prohibition on landlords passing land tax to tenants in this period. There's a prohibition on landlords charging interest on unpaid rent, and it's all for this period, this stage, the end of September. And it's prohibition on landlords making a claim on a bank guarantee or a security deposit for non-payment of rent during this period. And the code also indicates that ensure that any legislative barriers or administrative hurdles to lease extensions are removed, so that a tenant and landlord could agree a rent waiver in return for a lease extension. So there's a lot of changes occurring, and many of your clients are going to need guidance on this. There's also notes in the code which basically indicate that if the landlords and tenants sign up for the code of conduct, which is obviously voluntary, that the state and territory governments have agreed to look at providing some reward, primarily for the landlords, and that could be a 3-month land tax waiver and a 3 months land tax deferral. So that could be of some benefit to landlords, and that's the key requirements. The landlords must pass on the benefit of any changes in land tax to the tenants. But there's also a mutual obligation on small and medium-sized businesses which qualify for this, that and not-for-profits and charities also, that they'd continue to engage their employees. This is what the government's really on about. They're wanting people to keep their businesses going if at all possible. That's why the $1,500 per fortnight's been made available. And they're using that same structure to then try to get some breathing space for businesses when it comes to their commercial rents. So all of that's interesting. And many of you, I'm sure, are going to have clients only now starting, they might not even realize yet that this has been passed or was going to be passed into law in the various states and territories. But the National Cabinet has agreed to the Code of Conduct, which is what is the key document in all of this. So I expect that these changes are going to become law in the states and territories in the next week or so. And there will undoubtedly be some more work that you might be able to help your clients with. Or some of it could be legal work, of course. Let's now look at the Coronavirus SME Guarantee Scheme. Now, this is for SMEs facing cash flow problems. Again, turnovers under $50 million. But the federal government has agreed that it's going to be paying a 50% guarantee to these for these borrowers, giving the guarantee to the banks. It's for new unsecured loans for working capital. So it's not a loan that's there for expansion of your business. The words working capital are used. And in fact, the government also suggests to businesses that are registering for the $1,500 per fortnight process, the JobKeeper payment, that they approach their bank for a loan under the Coronavirus SME Guarantee Scheme so that they've got some working capital to cover them before they get some reimbursement back from the tax office. But they're unsecured loans and they're for turnovers under $50 million. Where's this money coming from? Well, the Reserve Bank is providing a $90 billion facility to banks. They're only charging the banks 0.25%. I read in the Reserve Bank's news release. And the Reserve Bank's wanting this money lent to qualifying businesses, small and medium-sized enterprises, with a maximum loan of $250,000, a term of 3 years, and to include a 6-month repayment holiday for the businesses. So they're not looking for repayments until hopefully the economy starts to improve. They're unsecured. The money's been available for at least some of the banks from the 23rd of March. I understand from a comment that a bank manager of one of the smaller banks that has not yet got their allocation, that there's a fair bit of form work to be completed by the banks. But one bank, the Commonwealth banks, obviously had access to the money since the 23rd of March, but the money's going to be available until the 30th of September. And any amount that's not spent by allocating to the SME community by 30th September is to be returned to the Reserve Bank, because the government wants this money out there in the marketplace being spent so that it creates economic activity. The Commonwealth Bank has indicated that they've already lent $150 million of this amount at 1 to 1,850 businesses. 70% of them are from New South Wales. I don't know what the other states and territories are doing. The review, sorry, I got ahead of myself there. I was going to tell you the where these businesses come from that applied for that, but I didn't have the news release out, did I? But I've just picked it up. Hospitality operators, 15% of the loans that the Commonwealth Bank's issued. Construction businesses, 13%. Professional services, could include accountants, of course, 12%. And retail, 11%. That doesn't add up to 100, but it obviously shows then there's a whole range of considerably smaller industry groups that have also participated in those loans. So that's underway. Your clients probably need assistance in putting those loan applications together so that they can get that money. And bear in mind that the payments of the wages has now been made, and they will not get any reimbursement from the tax office under the JobKeeper payment scheme until at least the first week of May. So your clients may be very interested now that I think the dust has now settled on how all this is going to operate. The legislation's passed. The government has got the authority of the Parliament to start handing the money out. I assume the Governor General has not yet signed the legislation. So once he signs it, presumably today or on Tuesday, it is law and the money will flow. Everything we've looked at so far has been what the government's done. The government has provided an enormous amount of money, and there's been a lot of work undertaken, not just by the National Cabinet, which has been quite an eye-opener, hasn't it? State premiers and chief ministers and prime minister meeting without what appears to be any great arguments. I'm sure there's been some disagreements, but they seem to have patched them over in the final communiques, and they are working together. I only wish that could happen all year. And even what happened in Parliament yesterday between the opposition leader and the Treasurer and the Prime Minister was refreshing to see people cooperating in the national interest. But now we turn to your role as accountants, business advisors, or bookkeepers, advising your clients, because a lot of your clients are quite shell-shocked at present with this whole history of what's happened. It's happened very quickly. There was really no forewarning, was there? It was only a few weeks ago the Prime Minister was talking about going to a football match on the Friday or Saturday night, and then the day before we suddenly started seriously talking about this social contact and not being in big groups. And that was only a few weeks ago. So the government, I think, has done its part. It has introduced a range of legislation and put a lot of money into the system. The challenge now is for accountants to provide a higher range of services than what you normally provide for taxation. And that is in no way criticising anyone for what most of you do in the taxation area. And I used to do that myself also some years ago. But your clients are now looking for commercial advice, advice to take them through this very dangerous situation, but be ready to take advantage of the commercial opportunities that we all believe will be there at the end of this virus. So we've talked about what you might encourage your clients to do in a survival plan, review the government packages, assist client in their applications. So we've talked about that and we'll move on. Clients are going to need to communicate with suppliers to make sure they know where their orders are. Are they going to get the orders fulfilled? Is there something that could be done in negotiations with suppliers relative to the price of products or the payment terms? Could they be extended? And I think a lot of businesses are going to be seriously thinking about whether it's a sound business objective having all your supplies coming from one supplier in one country. And that will be the subject of a lot of comments once the dust has settled a bit out of this virus. Communication with landlords. Can we negotiate rent reductions for clients, especially if they're eligible for the JobKeeper payment, which gives them that bargaining chip in talking to their landlords. Review outstanding debtors. What's the debtors' days outstanding? Is it over the stated terms of trade for the business? I read somewhere the other day that Australia's still on 56 days outstanding. When we were called the world's worst debtors collectors, our figure was 56.4 days. So we've only improved in 4 years, 0.4 of a day. It's not a great record. So most of your clients will have people who owe them money substantially beyond the 30-day trading period. So approach them, try and do a deal, try and get some money, because cash is going to be very important. Look at the stock. Is there old stock, old-fashioned stock, last year's fashions, stock that's been sitting there for 3 or 4 years? I think it needs to be bundled up and got rid of. Try to convert it into cash. Someone might want it. What about surplus assets? There's a lot of people sitting at home at present because they can't go to their places of work. And I don't know whether they're all able to be gainfully employed whilst they're at home. Not everyone sits on a computer all day and creates things. So some of those people might be looking to buy some old plant and equipment and rejuvenate it, do something with it to keep themselves occupied. So if one of your clients has got some surplus assets, now could be a good time to run some ads and liquidate them. Because whilst the supermarkets are saying they're frowning on cash at present, because it might be carrying the virus, businesses shouldn't be frowning on cash. If you can get cash into your business so it can reduce some of your obligations, that's great. So that all of this can then be reflected in a budget or a cash flow forecast that you're prepared for your client. And then it's possible to look at what's the position. Does your client need to try to get some extra capital into the business? Well, perhaps they should be looking at one of those special loans that I was just talking about, the coronavirus SME guarantee scheme of up to $250,000. But you've still got to go through the application process. They need a strong business case to be able to support that application to their bank. And they should be doing that now. Some of your clients, though, might be looking for some more money because they want to do some expansion in their business or whatever. And they may be considering trying to raise capital. You could raise capital under Section 708 of the Corporations Act, up to $2 million from 20 investors in a 12-month period. There's no requirement to get any official approval from anyone other than the board of directors to utilize Section 708 to raise capital. The company should prepare a business plan and a budget and a cash flow forecast and have current financial accounts prepared. You can only talk to some specific people who are customers, suppliers, employees, relatives of those people. You could then talk to them and see if you could raise some capital. The company might say it needs an extra $500,000 over and above trying to get a loan of $250,000 under the guarantee from the federal government for the Corona SME guarantee scheme. You could probably put together that process for raising under 708 in 4 to 6 weeks, and the company would have some cash coming in. Another alternative is to look at crowdsourced funding equity raising, but that will take longer. Many of the intermediaries want companies to go through a Section 708 process first in any case, and then there is a 3 months listing period available for crowdsourced funding equity raising. So the process can be 20 to 26 weeks. Might not suit some of your clients, but it's worth thinking about. It's worth having a conversation with them. Unfortunately, in some cases, by the time you get to this stage, you may have made the decision, or your client may have made the decision that they're going to close down the business, in some cases on a temporary basis, and hope to be reactivated when this crisis is over. And some will be deciding that they're going to do something else in any case. And that's unfortunate, but that's what happens. So you could look at doing an application for that special COVID-19 loans that's guaranteed, or 50% guaranteed by the government. You then need to be looking at how you're going to assist your client to implement this COVID-19 survival plan. I think the type of conversations you should be having with your client is to recommend that there's a regular monthly review meeting. You're there wearing your chief financial officer's hat, the client's management team, and you work diligently through every aspect of their business, and in particular, monitoring the performance of the COVID-19 survival plan. Some of the suggestions that I think you could make to the management teams within your clients to help them navigate this crisis. They should have their own COVID-19 coronavirus disaster team that would meet at least weekly. In some cases, it might be daily, 5, 10, 15 minutes, but in some cases, it might be 4 or 5 hours, looking at what's happening on getting some cash in, debtors, stock, surplus assets, and those types of things, but also closely analysing the various news releases and pronouncements that have been made by the federal and the state and territory governments, and monitoring everything that's been said in this space so that the company or business is informed and knows where to go. Those of your clients who have got businesses that are basically gone to working from home, that process needs to be checked. Make sure the insurance companies have been notified, make sure there's security measures being put in place. And if they're not already doing it, why not suggest to them they have a daily meeting or a huddle? Now, it's going to be a bit difficult if they're spread all over a big area because they're working from home, but utilizing Zoom, they could have a Zoom meeting every morning at 8:30 or 9 o'clock, 5, 10 minutes, have the meeting in teams so that they can communicate with one another. That's very important when people are scattered and not working in their normal team environments, and discuss the issues affecting the business. And keep in touch with suppliers. Suppliers are very important in this whole process. And try to think about creating some new supply chains. So you might suggest that to your clients, and suggest also that they really keep in touch with their customers, especially their major customers, and that they monitor the cash flow forecast every day. Andrew Geddes, who some of you know very well, was one of the founders of the Financial Management Research Centre at the University of New England, and then was a director of Smith Inc. for many years, and for the last 11 years has been the chairman of Green Cross Limited, a top 200 public company. And he is still the chair of a number of accountancy firms around Australia. And he's chair of a number of other professional practice type businesses. Indicated to me the other day that the various companies that he's involved in, they are bunkered down looking at cash flow every day to try to keep ahead of this problem. And that's why analysing what the government's now got the mandate, the financial mandate to do, getting those applications in is very important so that the money that's going to come out of the government's purse is able to be accessed, and the businesses know how much money they have to generate from their own activities to keep everything going okay. Review costs. That's very important. What efficiencies can be created through reduction in cost. Employee manuals probably need a review. I doubt whether too many employee manuals had documentation relative to COVID-19, coronavirus. So perhaps you should be making sure that your clients are updating their manuals. I'm not really expecting accountants to be able to advise your clients on these areas, but you could suggest that they do it as part of managing the overall process, and they go to their human resources consultant, or you refer them to one. And if you're not sure of one, please send me an email, peter@essbiztools.com.au, and I'll be happy to introduce you to a competent human resources consultant. So all of this is a commercial response, not a taxation response. Most of your clients will be looking for this type of assistance at this stage. It's still some time, nearly 2 3/4 months until the end of June. End of year tax reviews are still important, but at this stage, I think the priority should be helping your clients to survive by being a very proactive Chief Financial Officer. And we have got the material which will assist you to do that. It's worth making this comment. Australia's really got out of some disastrous situations in the past, and this will not last forever. And I'm sure Australia is going to recover. I'd like to invite you to log on to ESS BizTools /survival in difficult times, learn more, whereby you can have an overview of the sort of material that we have developed, that we have been providing to Australian accountants for the last 20 years, not this particular product package, of course, but we provide material to assist accountants to be able to offer a range of services beyond compliance. So survival in difficult times, go there, click onto the learn more, you'll be able to review the material. This will give you a full appreciation of what we've included in the product package, which we've called Survival in Difficult Times product package. Your investment, if you would like to subscribe to this product package, is only $92 per month, including GST. That's 12 payments. Or you can take advantage of the discounted upfront payment option, $990, including GST. Will give you the access for that 12-month period. So to subscribe, please go to our website, www.essbiztools.com.au/survival in difficult times, learn more /subscribe now, and you'll be able to activate your subscription. Alternatively, you might be interested in subscribing to the total ESS BizTools package, which we call our Gold package. This covers 23 other product packages and a whole range of other material, including Business Plus, our client newsletter. And what I have in that I'm holding up, I hope you can see, is our newsletter for the month of April, which is has already been sent. It's nearly 1 o'clock. It's after 12 o'clock. It's uploaded to our website. So our subscribers around Australia have got that. I'm going to send that to you with the link to the recording of this webinar, so you can have a look at the material that's prepared so you can rebadge it and send it to your clients. And you can imagine what it's talking about this time. The government's funding for this whole COVID-19 coronavirus campaign. So the upfront commitment will cost you $2,970, including GST. We're also establishing a survival panel, a COVID-19 survival panel, because we're going to start holding a weekly video discussion targeted at accountants, bookkeepers, and business advisors. Our aim to help in restoring confidence and helping building for the future. The panel includes myself, Andrew Geddes, who I mentioned before, former chair of Green Cross. Paul Barnaby is the Australian and New Zealand manager for Plan Guru and is a very experienced accountant. Jordan Lowry, the managing director of Blackstone Business Group, a human resources consultancy firm. Ashley Evans, director of AAA Consulting, but also Ashley and his whole team are all former bank managers or bank staff, and they pride themselves at the ability to organise finance for clients. Priscilla B. Smith, who's a partner in Cloud9 Associates in Brisbane, but who also offers mentoring and coaching services to assist business people and employees of accountants to get a better appreciation of bookkeeping requirements and tax agents requirements work to get a license. Kevin Thiel, who's an accountant but concentrates on management accounting. Amanda Gascoigne from the Hunter Valley, who advises accountants on the softer skills that are needed: communications, running seminars and webinars, using technology like Zoom and Skype to promote and market firms. Trent Butler is from Sydney, who is a chartered accountant, but is specialising in helping younger practitioners who have just started out to get a foothold in the marketplace, helping them with their social media activities to get a presence in the market. We'd like you to submit questions to us, and the first of these webinars is on Friday the 17th at 12 noon AEST. You'll be receiving an invitation. It is free. Please register, and you can register now by going to www.essbiztools.com.au/webinars. And we'll be presenting this sort of forum to discuss every week from the 17th of April to the end of September, or for how long this virus lasts. At each of the presentations, there will be 2 experts, and I will be the chair, the moderator. The first presentation on the 17th of April, we'll have Jordan Lowry, Managing Director of Blackstone Business Services. He will talk on the human resources aspects, and Andrew Geddes, very experienced, in fact, I think the most experienced accounting mentor in Australia. And he's going to talk about a lot of the human issues and the director's responsibilities and keeping everyone motivated and on track. So I think that should be nearly compulsory viewing for accountants, Friday the 17th of April at 2020 at 12 noon AEST. If any of you require any assistance, because you're still flat out on doing tax returns, you know your clients need some assistance, why don't you contact a colleague, excuse me, or you can send me an email, peter@essbiztools.com.au, and we will be able to introduce you to some practitioners that might be able to assist you. So please don't hesitate to contact us. Send me an email, peter@essbiztools.com.au, or give me a ring, 1-800 232 088. Keep safe. Good luck and best wishes for what is probably the most important and stressful time of your professional life. From the team at ESS BIZTOOLS. As I said earlier, if you want to discuss anything, please let us know. Thank you for being with us today or watching this at a later time. Have a good day. Goodbye.